Since the 2020 and 2021 refinance boom, we've been in what's called an interest rate lockdown. Let's explain what that is. So currently, over 62% of homeowners have an interest rate which is sub 4%. So if you're a homeowner and your interest rate is sub 4%, what are you always analyzing when you want to sell and possibly take on a new home? You're analyzing what your next mortgage payment will be. So if you're at 3% and you buy at today's interest rates, which are going to be between 6 to 7, depending on loan program, FICO score, and LTV, things of that sort, you're going to be having a major increase in your mortgage payment. Obviously, this is basically adding to the fire of our inventory problem. Sellers don't want to sell. They don't want to have that 3% interest rate become a 7% interest rate, and rightfully so. So when can we finally expect some relief with this? So in the next 2 weeks, we have 3 major events which could be a catalyst to lower interest rates. On Friday, April 28th, we have the PCE, which is the Personal Consumption Expenditure Price Index, essentially a knockoff of the CPI. In addition, on May 3rd, we have the Fed Fund meeting, and on May 10th, we have the CPI. All 3 of these are important to watch as they could be a trigger for lower interest rates. In addition, we finally might have hit the inventory seasonal bottom. Inventory climbs 2% for the first time this year, which is going to be a great signal that possibly more inventory is likely to come here in the next few months. So with this news that inventory might have hit its seasonal bottom, we might be able to finally see some relief with that interest rate lockdown. Again, a homeowner's not going to want to sell from 3 to 7. They might be willing to sell from 3 to 5 or 3 to 5.5. We'll obviously have to wait and see. Hopefully, again, these next 2 weeks could be a possible catalyst for lower interest rates.